Our market monitor is using the sell-off in some of those big-name companies to buy more shares at a lower price. He's Randall Eley, President and Chief Investment Officer at Edgar Lomax Company. Randall, welcome. Good to have you with us. Last time you were on, you joined us in January. You recommended AT&T, which is flat since then, ExxonMobil, which is off more than 20%, and Johnson & Johnson, which is down 10%. I know that Exxon is one of your picks today, but let me ask you about those other two, Intel and J&J. Are you still comfortable holding them? Would you buy more?
Absolutely.
Why?
In both cases, they're in businesses we need. They're understandable businesses. Intel, you can't run your computers without them. Johnson & Johnson, we wouldn't have the life expectancies we have without their products. They're strong businesses financially. They have little debt. They're going to be around a long time.
What about Exxon, though, Randall? I mean, if this oil cycle is going to be longer than we've seen previous cycles, and we're not yet at the bottom in crude, how is that going to impact Exxon's bottom line? Would you buy more here?
Oh, absolutely. Well, we will buy more. In fact, we're going to do something that I hope you see as courageous. We would double up and also, oh yes, move money into Chevron also. Now, we've been owning it in our larger portfolios, but in a smaller portfolio like we're looking at today, we will go in. These companies are not going out of business. You know, people are assuming that oil prices are going to fall. I'm hearing below 20 like it's gospel. But many investors are assuming that these oil prices are going to fall to $1 or $2 a barrel. That's not going to happen.
All right, let's talk about Chevron, which we just pointed out is now in bear market territory, and how off 40% from its high. I assume you like, among other things, a very juicy dividend that just got a little juicier today.
We absolutely do. You're talking about a dividend of over, what, 5.5%. So this is more than twice that of the 10-year Treasury.
Would they ever cut it? Would they ever cut the dividend?
Oh, it's always possible. If the earnings fall for a sustained period below the dividend rate, then they would cut it. But they could afford to cut it in half, and it's still more than the 10-year Treasury yield. And the company would be keeping more money and becoming richer.
So, Randall, what about the overall market? That was one of the big debates today, is how much lower the S&P needs to go, will go, or is it bottoming out? What do you think?
Yes. Well, I don't think it's bottoming out as far as looking at a bull bear market cycle. But in the long term, you know, we expect stock prices to go up as these companies are profitable and add to their net worth or their book value. But the fact is, the price to book ratio, which is one we like to look at, is close to 3 right now. The price 3 times the book value. And I would be more comfortable seeing that closer, under 2.5, getting closer to 2. But you see, that's not expecting the markets to fall by half.
All right, let's go to your third choice very quickly, Randall, and that is Intel.
Yes. That was on the list last time. Again, you can't run your computers without them. This is a company, again, very little debt. They have constantly proven the naysayers wrong, who think that their business model is broken. They keep finding ways to remain relevant, and there's no doubt in my mind they will continue to. They also have tons of money to keep up their research efforts.
Randall, stay cool down there in Washington, my hometown.
Thank you. You too.
All right, Randall Eley with the Edgar Lomax Company.